Okay, we stopped here, isn't it? Plus the previous class. Okay. So what we have covered before, okay, to record credit purchases and to record return outward. Now, how do we identify credit purchases? So remember, when the business buy the good, but the payment is made later, then this is credit purchases. So always look at the word receive invoice. Okay, if receive invoice, meaning this is credit purchases. Yeah. So you open up, the prime entry will be the purchases journal. So remember, in purchases journal, the purpose is to do listing. So meaning we do in a columnar method, okay, format, like what we have here. And we need the details, the information on the dates, yeah, the dates, the particular, the credit, this one will be invoice number if it's purchases, and then the adjustment column to do the calculation to take into account the trade discount, then the final column to record the net amount. Okay, so credit purchases and return outward journal, they are sharing the same format. Okay, we need the date column because we want to know when exactly the transaction was, and then we need the details on the name of the supplier that we are owing, and what is the condition of the sales. Probably there is a trade discount. So all these details are very important. And then the column on the invoice number or the column on credit note number. Okay, so we list down. So this one we have 4 transactions during the month. Okay, about return outward. Then you must understand the effect. Okay, because we are going to do a single entry. Single entry, meaning we are not observing double entry for the first step. So there are 2 steps, isn't it? The first step, okay, it will be in the purchases ledger, single entry. And then the second step, it will be in the general ledger, double entry. So this is our guidance, our reference. Okay, when we record the first step, so we record individual date, yeah, 4th, 9th, 16th, 23rd, and we record individual amount. So that is to the purchases ledger. Purchases ledger is individual, yeah, individual trade payables account, all this. So remember, trade payable is liability. So liability is a credit item. And then a credit item means if the transaction increasing, the amount of trade payable increasing, so then it will be on the credit side. If the transaction reduces the amount of trade payable, the liability, then it will be recorded on the debit side. So that explains why, okay, the trade, if it's purchases, credit purchases, it increases. So that's why this is credited, yeah, purchases 2,400. So meaning we have to record the net amount after the discount. So remember that 2004, and then we have to record according to the date of transaction and individual amount. Okay, so the possible debit, yeah, in the trade payable, remember that transaction reduces the liability. So that's why when the business make payment by cash, okay, this will be recorded on the debit side because reduces the trade payable amount. Okay, that's what we have covered last Monday. And then we have return outward. Remember, return outward also reduces. That is why this is debited. Okay, debited in the trade payable. So we only do a debit entry at this point. Yeah, the first step. So this is what we call single entry. We don't observe double entry. At the end of the month, then we do the double entry. So like what I've explained to you, return outward is recording inventory level. So inventory level reduces. So definitely return outward will be credited. So at the end of the month, we do the second step. So this is your guidance. So in general ledger, open up return outward account and then open up trade payable control account in the general ledger. So this is what we have, return outward account and trade payable control account. Then, okay, follow the entry stated in the prime entry. So which is return outward account is credited 2,144 and debit will be the corresponding account, trade payable control account. Okay, so just an explanation why trade payable control account is being credited. Because when the business return the good to the supplier, definitely the amount of the trade payable become lower. Okay, because it's already been returned by the business. So that is why the effect is reducing. So it will be debited in the trade payables account. So that is the first explanation. And why return outward account is being credited. Okay, remember, return outward is one of the inventory account. So if the business return the good to the business, the level of inventory become lesser. So lesser meaning this is inventory. So it reduces a debit item. Inventory is an asset, isn't it? So that's why we follow the double entry rules. We credit return outward account. So after you understand, now you memorize it so that the process when you do the posting will be much more faster. So if you are confident, okay, you can understand why return outward is credited. So just remember, if this is credit, I'm sure about it. So the corresponding account must be debit. Okay, so that's all. Now, next one is payment of purchases. Payment of purchases meaning the business are paying the trade payable. Okay, it's already due. So now the business are paying to the trade payable. So what is the effect towards the trade payable? So remember that once the business makes payment, the amount the business owing to the trade payable become lesser, lower. So the effect is reducing. Yeah? So what is the books of prime entry whenever we make a payment? So again, this is cash payment or check payment. So it must be cash book as the prime entry. So when payment are made to trade payable, the cash book is credited because cash book consists of cash account and bank account. So cash account and bank account classify as an asset, a debit item. So when we make a payment, it reduces the amount in the cash column, also in the bank column. So that is why it is being credited. Okay, the dates of the payment and details of the payables are recorded. Now, closing of cash book, payment for purchases. So how do we close the cash book? Okay, for payment to trade supplier, we post one, meaning this is the first step, like the purchases also. The first step, we post one by one to debit side of purchases ledger. Okay, purchases ledger, individual trade payables account. Okay, debit side of individual trade payables account, meaning okay, reduces the trade payable, individual trade payable, isn't it? So we only observe single entry, not double entry. So we only do what is the meaning? Single entry. We only do debit entry, but there is no credit entry. Okay. Then the second step will be done at the end of every month. So when you record the debit side individual amount and record according to the date of transaction, just like the purchases journal, the return upward journal. At the end of every month, okay, meaning this is the second step, the cash book is closed in order to do posting of total to the trade payable control account in the general ledger. So this is where you do double entry. But since cash book is considered as part of the general ledger, you don't have to reopen cash account and bank account. But the amount that we recorded in the cash column and the bank column is regarded as part of the general ledger. So meaning we already credited. So now we only do a debit entry in the trade payable control account in the general ledger. And we record in total amount and the date also at the end of the month. Yeah. So let's look at the illustration, payment of purchases. So look at the transaction. So record the above transaction into the cash book. So meaning you are required to open up the prime entry cash book. So you have to know how to draw the cash book and then post the data from the cash book, okay, to general ledger and purchases ledger. So meaning you need to do the two steps. The first step, single entry in purchases ledger, and the second step, using the double entry in the general ledger. So that is the requirement. Now, this is the transaction. June 4th, pay cash 1,200 to Grand Trading as part payment for the outstanding sum. Now, as you read the information, so can you see is there any specification what is the payment for? It's very general, isn't it, for the outstanding sum? So if that's the case, meaning this is a trading item. But if you look at the transaction like pay cash 1,002 to Grand Trading for purchase of computer, that is specific. So that is immediately you must understand that that computer is non-trading item. That is to be used in the business. Like this one, okay, there is no specification, but they just put you, they give you a very general term for the outstanding sum. So meaning you can assume this is for trading item, right? So if this is trading item, meaning the Grand Trading is trade payable. Can you get what I'm saying? If to Grand Trading and then they state purchase of motor vehicle, then the Grand Trading is not trade payable, is a other payable. So that's how we identify. That is the technique. Okay, so identify the keyword cash and Grand Trading. Okay, so cash, pay cash. So meaning immediately you know the prime entry will be cash book. Okay, so you do the entry in the cash book first as a prime entry, and then after that you do the first step. So record into the purchases ledger. So meaning in the purchases ledger, you open up trade payable Grand Trading. Okay, open up the ledger account for trade payable Grand Trading, and you must know, okay, where do you record? So look at the effect. If the business make payment 1,200 to Grand Trading to the payable, the amount in the trade payable Grand Trading become lesser. So meaning the effect is decreasing. So you record on the debit side of trade payable Grand Trading. Okay. So further of the transaction 11 on the 11, a check 75 issued to Fix It store being late payment fees charged in the previous month. So the keyword check. fixed store. Okay, again, there's no specification of the item, but only very general fees, late payment fees charges. So meaning this is related with the trading item. So the keyword check and fixed store. So we can assume fixed store is the trade payable. Okay. So what is the prime entry? Of course, this is a check issued, means this is a cash transaction. So prime entry will be cash book also. So record in the cash book. And then after that, you do the first entry, that is in trade payable. Trade payable in the purchases ledger, put into the trade payable fixed store, and you record on the debit side. And the particular, because you're receiving in check, so meaning particular will be bank. And then on the 18th, pay the check to Jan Trading. Paid check to Jan Trading as full settlement of an outstanding invoice of 6,000 and deducting cash discount of 6%. Okay, this is paid, a check. So the keyword check, Jan Trading. Now we want to determine whether Jan Trading is trade payable or not. Okay, we look at the word after that, full settlement of an outstanding invoice. Again, very general. So it's not specific, so we can assume this is the trading item. So therefore, Jan Trading is trade payable. Then what is the prime entry? Because we make payment by check, so the prime entry will be cash book. Okay, but then you have to determine whether the 6,000 is the check amount. You see, outstanding invoice of 6,000. So this 6,000 is the invoice amount. So meaning the check amount, you have to less with the cash discount of 6%. Right? So meaning to say only 94% will be the check amount, and then 6% will be your discount receipt. Okay, so we go through the transaction further, and later we go through how we record. Now, settle of account by check 1,004T to Grand Trading. Again, so no specification, so we assume, because this is previous, we have Grand Trading, so this one is also trade payable. Okay, and the prime entry, of course, this is cash book because of the word check. So the keyword here, check and Grand Trading. Right. So let's look at how we do the posting. So this one is not actually required. So this is only to explain to you what is the account to be debited and what account to be credited. Okay, the journal entry. This is not prime entry, but this is an information or an explanation what is the account to be debited and credited. So the question is only asking prime entry and post the data to general ledger. So we debit a trade payable, like what I've explained to you, because the effect is reducing the trade payable, which is a credit item, liability. And then we credit cash, okay, because reducing a debit item. Cash is an asset is a debit item. Okay, and then next one, also the same thing, trade payable, reducing. When we make a payment by check to fixed store, the amount business owing to fixed store becomes lesser. So that's why this is debited. And the bank also, a debit item reduces, so it will be credited. Okay, same goes with Jan Trading. So reduces the trade payable. And it reduces the bank also. So like what I've explained to you, the outstanding invoice amount, 6,000. So 6,000 is the invoice amount, not the check amount. So the check amount is after you minus the discount received. So 96% of 6,000 is, 94% of 6,000 is 5,640. Okay. 0.06 times 6,000 is 360. So that will be discount received. Now the explanation why bank is being credited, because the transaction reduces the amount in the bank, a debit item. And why discount received is being credited, because discount received is an income. Remember, as I told you, any item that is ended with the word received is other income, isn't it? So revenue is a credit item, income is a credit item. So this transaction, before we don't have any discount received, but after this transaction we have discount received, meaning increases the discount, increases the income. So that's why we credit discount received 360. Okay, and on 27, okay, this one liability trade payable reduces, so that's why we debit. Okay, the bank debit item reduces, so we credit. Yeah, so we are following the rules. Now this one is explaining, before this is explaining the first step. Now this working for month-end posting, this is the second step. That is at the end of the month, that is on 30th. So we take the total, trade payable control will be debited, okay? And then cash column will be credited 1,002, bank 6,755, and discount received 360. So this is the explanation using the journal entry. Now, this is the answer for the question. Open up a prime entry or record the above transaction into the prime entry. So we have determined the prime entry will be the cash book. Okay. And remember, cash book, okay, we are using 3-column cash book. So this is debit column. So we have discount allowed, cash column, and bank column. And this is credit column. We have discount received, cash, and bank column. Okay. Now, the nature of the transaction that we have read just now in the illustration, okay, all that prime entry is cash book. Now, the effect is it reduces, yeah, the bank column and the cash column. So that is why all the entry, all the listing, okay, will be done on the credit side. But at this stage, yeah, when I say at this stage is when we record according to the transaction on the 4th, on the 11th, on the 18th, on 27th. This detail that is recorded in the cash book is not regarded as credit entry yet. Can you get what I'm saying? Not regarded as a credit entry yet at this stage. So this is regarded as a prime entry. Prime entry. Prime entry is a listing. So we list down on the credit side of the cash book. So it's not credit entry yet. Okay. So the first one, if you look back on the transaction, okay, payment by cash to Grand Trading. So by cash. So meaning we record in the cash column 1,200. And then the particular trade payable Grand Trading. Then after that, paid by check 75 to trade payable fixed store. So record in the bank column 75, the particular, write down trade payable, and then fixed store. Then on the 18th, okay, payment by check. Okay, total 6,000 outstanding invoice. So outstanding 6,000 is outstanding invoice amount. So the check amount that we need to record in the bank column will be after the discount given, a discount received. Yeah. So 6% discount received. So meaning we only pay out of 6,000, we only pay 94%. So we get 5,640. So the balance is considered as discount. We record the discount receipt. Then the particular, we write down trade payable, Jan trading. Then the last payment on 27, okay, by check. So 1,040. So record in the bank column 1,040. So we have recorded in the prime entry. Now we do the first step. So in the purchasers ledger, open up individual account, okay, trade payable Grand Trading, trade payable Jan Trading, trade payable fixed store. Okay, so now these are the possible entry that you could have in individual trade payable. So that is none other than credit purchases. So and payment by cash, payment by bank, and then return upwards. So these are the only transaction that we have in the trade payable. So common, meaning you just have to, open your mind. So these are the only transaction. So you must take control how to record it by understanding it. Now, how to understand? So first thing, trade payable is liability, is a credit item. So meaning increases will be on this side, credit. Decreases will be debit side. Okay, increases meaning after the transaction, the amount of the trade payable become higher. Decreases meaning after the transaction, the amount of trade payable become lesser. And that is the meaning. So purchases, when the business makes a credit purchases, it increases the amount trade payable. Yeah. When the business makes payment by cash, makes payment by check, it reduces the amount business owing to the trade payable Grand Trading. So that explains all the possible entry in this account. So we have just now payment. So individual payment on the 4th. Okay, the business make payment, trade payable Grand Trading 1,200. So we use this as a reference. So 1,200. Open up trade payable Grand Trading in the purchases ledger and record this on the debit side. And then open up a trade payable fixed store, record 75 on the debit side. And the particular you write down because this is from bank column, so put bank and then the date 11. And then on the 18th, okay, on the 18th, open up trade payable Jan Trading in the purchases ledger, record on the debit side 5,640 and record 360 on the debit side. And the particular you write down, this is from bank column, put bank. And then this is discount receipt column, put discount receipt. And based on this transaction date on the 18th. So look at trade payable, Jan Trading. So 5,640. Okay, since from bank column, so you write down the particular as bank. 360, it comes from discount receipt column, so you put down the particular here, discount receipt, and the date of the transaction on the 18th. You get it? So we only do single entry. So we only do debit, no credit. Okay, and then the last one, 1,040. Trade payable Grand Trading. So open up trade payable Grand Trading in the purchases ledger. So this is trade payable Grand Trading. It's already been opened. You don't have to reopen. Okay, and then record the payment 1,040, and then it's from the bank column. So you write down the particular as bank, and the date is 27. So done the first step. So this is the first step. Huh? So we have done all this. So the second step is the total, this total. Okay. But then in the real life, so this total, we can't take blindly take that amount because in the payment side, not only trade payable, we have other payable, we have expenses. So we have to, manually extract the amount only involving trade payable. Okay, but for illustration purposes, they only specify all this trade payable. Okay, now we do the double entry. Okay, this is where you can see cash book is playing two different roles. One as a prime entry, like the first step that I showed you, he is acting as a prime entry. Now, he is acting as one of the general ledger account. So we don't have to open up cash account, bank account. It's already the one that recorded in the prime entry is regarded as cash account, one of the ledger account, bank account, but not for discount received and discount allowed. Okay, so we do this first. Yeah, so we have credited the bank column 6755. So to complete the double entry, open up a trade payable control account in general ledger and record this is credit, isn't it? So this one should be debit 6755, and the particular you write down bank. And then we move on to the second column, 1002 cash column. So already been credited. So the corresponding entry must be debit. So we debit trade payable control account in general ledger. So 1,200. The particular, you write down cash. And 360. But this one is not regarded as one of the ledger account, meaning we have to open up a discount receipt account in the general ledger. So open up discount receipt and credit the 360 in a discount receipt because this is revenue, income category. So credit item. So we put 360 particular, you write down trade payable and the date, okay, the last day of the month, June 30th. Then complete the double entry by recording the trade payable control account, same amount, 360, and the particular, okay, heading of the account that is being credited, discount receipt, and the date, June 30th. Now, we have completed the two steps. So now, what we do, okay, we look at the trade payable control account, compare with the purchases ledger, whether are we having the same amount. So we have to do the trade payable list. Okay, so in remember this is a credit item. So meaning if you have a debit balance, meaning it's negative. So that is why all these are negative because we only have a debit entry here. Okay, we don't have a credit entry. So that's why it's debit. Yeah. So we have negative 8,315. So it should have the same as in the general ledger. So when we do the balancing here, so this one also debit. Okay, when we total, we get the same amount, negative 8315. Okay, so done with purchases cycle. Any question?
No.
Okay, now sales cycle. This one is sharing the same concept like what we have learned in purchases cycle, but it just that is the opposite. Okay, remember in the sales ledger, you will have individual trade receivables account. Why I say opposite? Because in purchases ledger, you have individual trade payables account, isn't it? It's liability. So trade receivable is an asset. So meaning this is a debit item. Just now was a credit item. Okay, so the opposite. That is the meaning. Now, in the course of conducting business, settlement or payment of sales transaction determine the type of sales. So you look at how do you identify whether credit sales or cash. So you look at the payment method. So if it's paid later, then it's credit sales. If it's paid immediately, then this is cash sales. Okay. So if it's cash sales, the source document, okay, either you look at the source document or, if it's cash bill, then meaning this definitely is cash sales. But if it's invoice, the source document, meaning it is credit sales. But again, you have to look at the wording because sometimes you get confused whether it's purchases invoice or it's sales invoice. So you look at the direction. If sending invoice, meaning that is sales, credit sales. Receiving invoice, that is credit purchases. Okay, that is the keyword, receiving, sending, right? Then, now if it's cash sales, okay, it will be the prime entry will be cash book. But if it's credit sales, the prime entry will be sales journal. Okay. So we have trade discount also. So remember, trade discount is to encourage bulk purchases, encourage large sales, large quantity. So you don't record in the books, but you have to show it. Okay, how much is the trade discount given? You only record after the trade discount, the net after trade discount. Okay, so again, remember, in return inward, when we have a sales return, so you have to refer back from the sales journal whether that particular trade receivable were given a trade discount. So if it given trade discount, meaning you have to consider the return outward, the trade discount as well. Okay, it will not be stated in the sentence, but you are expected to look back at your sales journal and see whether that particular trade receivable were given discount, trade discount. Okay. Now, return inward. Okay, the direction. How do you distinguish between outward and inward? Okay, this direction, inward, meaning the goods are coming back to the business. So this is indicating sales return. Okay, why the customer returned the good? Because of the same reasoning, defect. Okay, meaning it's spoiled, it rusak. Yeah, and legal rights, meaning different quantity. They asked for 1,000, but it was given 2,000. This is legal right. The customer have the rights to return it. Or they ask for A grade, but then you give C grade. So this is wrong. So legal rights. Now, what will be the source document? The source document will be credit note also. So sometimes you get confused whether is this return inward or return outward. Again, you have to look at the direction. If receiving credit note, meaning indicating return outward. Okay, if sending credit note, indicating return inward. Because very easy. Just remember the direction of the source document must be from the seller to the buyer. Okay, so meaning if the business receiving the credit note, definitely the business is at the position of a buyer. So meaning this is a purchaser's return outward. Okay. And the books of prime entry for return inward, of course, is return inward journal. Yeah, return inward journal. So meaning return inward journal also sharing the same format, that is a listing where you must have a date particular, okay, the return inward number, and you have sub-column to consider the trade discount, and then net after trade discount. Okay, this is the flow of the sales cycle. So you must have a source document to evidence the sales transaction. Then this source document, you can identify what is the books of prime entry. If it's sales invoice, then the prime entry will be sales journal. If it's cash bill, meaning that is cash book, yeah, cash sales. Okay, the flow is normally they will have sales order, then after that sales invoice. Okay, so if it's sales invoice, at the end of the credit terms, then okay, the customer will make payment. So if you have sales invoice, so you need to record in the sales journal. Okay, if you have sending credit notes, you need to record the return invoice journal. If you have received the money, okay, meaning the trade receivable makes payment, so the business need to issue the official receipt, and this will be recorded prime entry as cash book. Then we do the posting to general ledger and sales ledger. So following the same concept, that is, we have two steps. The first step, we do single entry into the sales ledger. Second step, we do a double entry in the general ledger. So that involves trade receivable control account and sales account or return inward account, okay, or cash book. Okay, from the sales cycle, we note there are credit sales, return inward, received from customers. So these are the common transaction that you will have in the sales cycle. Okay, so credit sales, very easy to identify. So you look at whether sending sales invoice. So definitely the prime entry will be sales journal. Return inward or sales return. So we're sending the credit notes. So sending the credit notes, so the prime entry will be return inward journal. Okay. When receiving payment made by the customer, so the prime entry will be cash book. Okay, this one, what are the source document involved in sales cycle? So first thing, of course, the sales order, it must be accompanied with the invoice. So meaning to evidence they are actually sales order. And then this one is for credit note when we have return. And then when we have collection, so you need to issue official receipt. So this is the flow. Now, these are all the explanation. So you read. Now, credit sales. The books of prime entry for credit sales is sales journal. Okay, sales journal also known as sales day book. So one of the 7 books of prime entry. So meaning every transaction you must have one prime entry. So there are 7 altogether. Now, how do we close the sales journal? Okay, the sales journal is closed and ready for posting as follows. So we have to do 2 steps lah. The first step is posted one by one to the debit side of respective customer account in the sales ledger. Okay, this is the first step. The second step, the total is then posted to credit side of sales account in the general ledger. And at the end of the month, the double entry completed, posted to the trade receivable control account in general ledger. Okay, now for single entry, posted one by one to the debit side. So let me explain. Remember, in the sales ledger is individual trade receivables account. Individual trade receivable. So trade receivable is under the category an asset, isn't it? An asset is a debit item. So meaning increase of the trade receivable, it will be on the debit side. So that is why when the business makes sales on credit, let's say to A, trade receivable A. So what happened to the trade receivable A? The amount of the trade receivable become higher, isn't it? So that is why we do a debit entry in the respective customer account, trade receivable account in the sales ledger, but only debit, no credit, because the first step is single entry. The second step, that is in the general ledger, we open up sales account, we open up trade receivable control account. So by referring to the sales journal as a point of reference, okay, the bottom part, so we take the total, we credit the sales account. And if we credit the sales account, why? Because this is revenue, a credit item. And if for sure is credit, then the corresponding account must be debit. So you debit trade receivable control account. And explanation why trade receivable control account is being debited, because trade receivable is a debit item, is an asset, isn't it? So when we have a credit sales in total, it increases the trade receivable control account. So that's why it's recorded on the debit side. Okay, that is the reasoning. But just remember one reasoning, then the corresponding account must be the opposite. That's all. Now you have this illustration, okay? Credit sales. The following are business transactions for Glamour Trading. Okay. All the goods are sold in terms of 20% discount. So meaning all is trade discount across the board. So sales of good to Ali and Moto at the list price 2,000 with invoice number 801. So there is no specification what is the item that is being sold to Ali Moto. Yeah, so meaning we can assume this is a trading item. So therefore, Ali Moto is trade receivable. How do I know this is on credit? Okay, because of the word invoice. Okay. So the keyword here, sales and Ali Moto. And I need to determine, is this a credit sales? Yes, it is, because invoice. So the prime entry will be sales journal. Okay. So after that, after you record in the prime entry, then you do the posting single entry into the sales ledger. So on the 8th, issue invoice number 802. Look at this. Issue invoice number. So I know this is sales. If receive invoice number, this is purchases. So this one is issue, so meaning is a sales to Roxy store as a sales of good. Very general. There's no specification. So meaning this good is trading item. So definitely credit sales. So sales journal. Invoice number 803 issued to channel agency, sales of good. Again, so channel agency is trade receivable. How do I know this is credit? Because of the wording invoice number. Okay. Supply good 4,000 and list price to Ali Moto, invoice number. Again, this is credit sales. So sales journal. Super Trading purchases good 1,360 at list price, invoice number 805. Okay, it looks like purchases, but then this is not purchases because Super Trading. So Super Trading is not our company. Super Trading is customer. We are Glamour Trading, isn't it? So purchase good. So meaning it sells also. And how do I know this is a credit sales? Because of the word invoice here. Okay. And then good 1,760 send with invoice number. Okay, send. So meaning is sales invoice. So credit sales. So all of this is the prime entry will be sales journal. Record the above transaction into the sales journal. And then post the data from the sales journal to general ledger and sales ledger. So always use the sales journal as your point of reference. Okay. provided you must know how to prepare the sales journal. So sales journal, you prepare in a columnar form. So you need the details just like purchases. You must have a date. You must have the name under the particular column, the name of the trade receivable, and the trade discount given. And we have a sales invoice number, okay, the adjustment column, and the net column. Bring it, yeah. So we do like this. Sales journal. So on the top, you must put the heading because this is part of the mark. So sales journal. And then you put the date column, particular column, invoice number column, adjustment column. So must be in RM. And then net column, RM also. So we get the important details from the transaction. Okay, that is the date, March the 3rd, and the name of the trade receivable, Ali Moto, and the discount given, trade discount, so 20%. So less trade discount 20%. Simple as that, isn't it? And then the invoice number, you write down 801. If it's no invoice number, you create also can. Okay. Then you put the amount, the gross amount before the trade discount 2000 and less with 400. So determining the trade discount amount, no problem. So how do we get 20%? 400, 0.2 times 2000. Then the net amount you put on the net column, 1006. And then on the 8th, Roxy store. Okay. Trade discount 30%, 802. Now the invoice number, because this is sales journal, so the invoice number is our numbering system. So that's why this is in sequence. Like purchases number, they are different. Why? Because that is your supplier system. Okay. So continue with all that according to as you read the transaction and record in the sales journal. So you have done the listing from 3rd until 26th. So they are 6 transactions. Then total it on 31st. So the bottom part, since this is sales journal, you write down sales account. And remember, this is revenue. Revenue is a credit item, so you put credit here. And then total the net amount after trade discount. So we have 11,072. So this is your reference to do the first step and the second step. So remember, this is the first step, 1006, 1920, 1856, 3200, 1088, 1408. So this is the first step. So meaning you have to record in the sales ledger individually. So individual amount, individual date. I mean, according to the date of transaction. 1920 individual amount on the 8th, 1856 on the 12th, 3200 on the 18th, 1088 23rd, and then 1408 26th. Okay. And the second step, this one at the end of the month, you do double entry. So in the general ledger, open up sales account in the general ledger and open up, this is trade receivable control account. Okay, follow this guide. So in the sales account, you put on the credit side this total amount. And the date, put 31st. And if this is credit, meaning trade receivable control account will be on the debit side. So same amount, total 11,072. And the date must be 31st. So this is your reference. Is it okay? Can you understand?
This one only for invoice to do like this.
Come again?
Only invoice do like this.
Only invoice do like this.
Yeah.
What do you mean invoice?
Or
So if
it's
the invoice,
if it's cash, not
if it's cash, then it will be cash book. That
so
is cash sales.
sales journal is for the invoice
Credit, yeah.
credit. Yeah.
Credit sales.
Okay.
So the first step, we do the first step in the sales ledger. So open up individually the account. Ali Moto, Roxy Moto, Channel, Ali Moto, Super already open, so no need to open two accounts. Super Trading and then Channel Agency, you already open, no need to open another one. So combine them in one account. Okay. So we have Ali Moto, so we have two transactions, so you don't have to open another account. And then Trade Receivable Roxy, Trade Receivable Channel Agency. So it is debited, yeah, because credit sales increases the trade receivables amount. So that's why a debit item. So you have to do credit entry. So since it comes from the sales journal, so all the particular is sales. So sales, 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 sales. Okay, this is single entry. And when you record, so remember the point of reference is using the sales journal. So meaning record individual amount, record in according to the date of transaction. 1920, March 8, 1856, you see. Third, 18, individual amount. 8, 1920. 12, 1856. 26, 1408. So very easy. And the particular, because it's from sales journal, so you put sales. Just now, the opposite, isn't it? Purchases. This is trade payable, so on the credit side, and you put purchases, purchases, purchases. Okay, easy to remember. Then in the general ledger, okay, you open up general ledger, open up the account, okay, sales account and trade receivable control account. So you follow in the prime entry, it says sales account is a revenue, so credit item. So you record on the credit side. So this is credit 11,072 and the date March 31st, the bottom part of the prime entry. So this is the credit. So meaning the corresponding entry must be debit. So that's why you debit trade receivable control account, okay, with the same total amount and the same date, March 31st. Okay, so this is where the double entry is being observed. So in the sales account, the particular you write down trade receivable, meaning referring to the name account that is being debited. And the trade receivable control account, sales account, referring to the name of account that is being credited. Okay. Now moving on to sales return. So sales return is return inward. Same. Okay. Look at the direction inward. What is the books of prime entry for return inward? Return inward journal. And remember, there are two steps at the end of every month. Okay. So the return are posted one by one. So this one single entry to the credit side of respective customer account in the sales ledger. Why credit side? Because okay, the trade receivable, the effect of return inward. When the customer return the goods to the business, the amount individual trade receivable owing to the business become lesser. So this is the debit item. So meaning it should be on the credit side. Okay, but then credit only, no debit. At the end of the month, then you do the second step. That is open up return inward account in the general ledger and open up trade receivable control account and return inward like what I've explained to you as one of the inventory account. So it's always debit. So we debit return inward. So if it's debit, meaning corresponding entry must be credit. So trade receivable control account will be credited in total amount. And the date must be the last day. So look at this illustration. So remember, okay, whenever we have return, always refer from the sales journal. Okay, whether that same particular trade receivable has been given a trade discount. If has been given a trade discount, meaning whenever he returns, so that trade discount must be taken into account also. Okay, so this is 20%. Everything is 20%. So record the above transaction into return inward journal, and then post the data from return inward journal to general ledger and sales ledger. So this is the prime entry, just like the return outward, but it's just that opposite. Yeah. Now we need the date column. We need the particular column. Okay, to record who are the trade receivable makes the return, and what is the source document number, credit note, and then we do the adjustment, and then after that the net amount only recorded in the last column. Okay, so this is your point of reference. So the first step, okay, on the 5th 800, on the 11th 720, 17th 640, 25th 960. So we record individual amount and the date of transaction, the first step. The second step, okay, at the bottom here we have June 30th. This one's supposed to be June 30th, and then the total amount. Okay, since this is written in word journal, so the bottom part should be written in word account. And remember, this is one of the inventory account, always debit. Okay, so debit, you write down debit. Now in the sales ledger, okay, open up all these individual trade receivable, Best Trading, Raj and Company, Missy Store, and this one we already opened, so we just combine them. Okay, Raj and Company. Now, record the first step. So remember, the effect of a return inward reduces a debit item. So that's why this is recorded on the credit side. So we only do credit entry. Okay, return in the particular you write down return inward because it comes from return inward journal. Okay, return inward, return inward, return inward. Okay, so this is showing you what are the possible entry that we have in the trade receivable. So this is what we have discussed just now, sales. Huh? Okay, and the journal entry, like what I've said to you, this is only trying to explain to you how to do the debit and credit, just like the purchases. So in general ledger, so this is the second step. Okay, by referring to this one, the bottom part. Okay, the date must be the last day and total amount. Open up return inward and trade receivable control account. So that is why. So we follow according to what is being written, debit return inward. So we debit the total amount and we date on the last day of the month. Then if this is debit, so corresponding entry must be credit. So trade receivable control account 3120. The date 30th. And in the trade receivable control account, the particular you write down return inward. Now, this one is a receipt from the trade receivable. So remember, receipt, when the trade receivable makes payment, okay, the amount of the trade receivable, a debit item, become reduced. So that's why this payment also will be on the credit side. So what is the prime entry whenever receipt from trade receivable? So the prime entry will be cash book. Okay, and then we do the closing. So meaning we have to do the first step. Okay, individually we post one by one to the sales ledger on the credit side. Yeah, and then end of the month, then we do double entry in the general ledger. Okay, but we don't have to open cash book and bank account. Cash account and bank account in the general ledger. So the prime entry that we prepare in the cash column and the bank column is regarded as part of the general ledger account. So look at this transaction. Okay, so record the above transaction into the cash book. So receive a check from Eleanor as full settlement of an outstanding invoice of 8,000 and deducting cash discount of 5%. Okay, the keyword check and Eleanor. So we have to determine whether Eleanor is a trade receivable. So we look at the further sentence. There is no specification what item, isn't it? So we can take the assumption that this is a trading item. So therefore, Eleanor is a trade receivable. Okay, so trade receivable, and we need to determine whether the check amount is 8,000. No, because after the word outstanding invoice of 8,000, meaning this is referring to invoice amount. So check amount must be lesser than 8,000 because given a cash discount of 5%. So meaning only 95% of 8,000. Okay. So again, this one also the same thing. Received cash 4,500 from Chester, being part payment from his outstanding account. Very general. So meaning Chester is a trade receivable. This is a trading item. Informed by the bank. This one is different. Eleanor's check was dishonored, meaning check turned down. Meaning the amount, the current account of Eleanor, not enough to cover, the payment she made. So that's why it was not honored by the bank. So it was returned. So we have to reverse this. Even the discount that we gave, also we have to reverse it. Reverse, like Carla, moving forward is if reverse is the opposite, isn't it? So this one also we have to make opposite entry. So if we have credited, so we have to do debit entry. That is reversal. Huh? Customer Billy who owes 3,000 pay her account by check. Okay, so the keyword check and Billy. So again, there's no specification what item. So meaning we can take into, we can assume this is a trading item. So we have trade receivable Billy, deducting 150 cash discount. Who owes 3,000 pay her account by check. So meaning 3,000 is not the check amount. So lesser times minus with 150, then that is the check amount. So let's do the recording. So this one is the journal entry explaining to you what is account to be debited and credited. Now let me show you how to do the prime entry first. Okay, remember this is receiving money. Okay, so receiving money in cash or in check form. So therefore the prime entry will be cash book. So remember at this stage meaning at this date transaction 19, 20th, 21st, 29, what we recorded here is not debit entry. This is a prime entry, a listing. Okay, so we record because we make payment to we receive payment from Eleanor in check, so therefore we record in the bank column 7,600, and then the other 400 will be discount allowed. Okay, and then receiving cash from Chester, so record in cash column 4,005. Yeah, and then after that we will inform that the bank dishonored the check, so we have to reverse because it's already been debited here. So reverse means we have to make a credit entry. So we credit in the bank column 7,600, but we can't reverse, we can't put the discount allowed in discount received here because this is different column. This is income, isn't it? So we must put the entry in the same column here, discount allowed, but we put negative 400, meaning we are canceling this discount allowed given to Eleanor 400 initially. Okay, and then after that, we receive payment, okay, by check. Okay, the 3,000, isn't it? So 3,000 is the amount owing. So the check amount is lesser than 3,000. So 3,000 minus 150 discount allowed. So 2,850. So we do the first step. So this is your point of reference. Okay, you record, you open up in the individual account in the sales ledger. So trade receivable Eleanor. Okay, you record on the credit side, and then you put the particular as, because coming from the bank column, so you put bank, and then 400 on the credit side also. So since this is from discount allowed column, so you put the particular as discount allowed. And Chester, 4,005. So record on the credit side and the particular, because this coming from cash column, so you put cash. And the reversal, okay? So meaning in trade receivable L&O, okay, you reverse. So because you have credited the 7,006, now you have to debit the trade receivable L&O, and coming from the bank column, so you put the particular as bank, and the discount allowed, okay, also on the debit side of trade receivable L&O, reverse it and put 400, and coming from discount allowed column, so you write down the particular as discount allowed. So like what we do this, yeah. Okay. So trade receivable L&O. So initially when he make payment, so bank column 7,600, and they have discount allowed 400, and according to the individual date, yeah, date of transaction and individual amount. Can you understand why this is credit? Because this is a debit item, isn't it? Now, when he makes the payment, of course, it reduces the amount of trade receivable. So that is why it is being credited. Now, after that, we have been informed by the bank. So the credit that you have made here should be reversed. Remember, whenever we have dishonored, so take note on the word reverse. So that is, giving us the hint that we have to make the opposite entry. So that is, we have to make a debit entry, same amount, 7,006, and same particular bank. So discount allowed also, same amount, 400, and same particular discount allowed. But the date will not be the same lah, because only on 21st, then the bank inform our business that it has been dishonored. So reverse the entry. Chester, okay, make payment by cash. Okay, we credit 4,500 particular cash, yeah, and individual according to the date of transaction. Billy, okay, we have 2,850 check amount, yeah, and you put the particular as bank, and we have a discount allowed 150. So what you have here, XXX, is all the possible entry that you could have in the trade receivables account. So try to understand it. Why sales is on the debit side? Because it increases the amount of trade receivable, a debit item. Okay. This one is different. It's not increasing, but it is reversing the entry that we have made because of dishonored. After doing the posting in the sales ledger, okay, we do the second step, that is opening the trade receivable control account and discount allowed account. Yeah. So first thing, total it. Yeah. Total 7,600 plus 2,850, and then 4,005. This one 150. Then, okay, we do the posting. Okay, we don't have to open up cash account, bank account, because this cash column and bank column regarded as part of the general ledger account. So this is debit. So we have to do credit entry in the trade receivable control account. So at this point, this is where this is considered as a debit entry. Yeah. At this point, meaning at the last day of the month. Okay. So bank plus this, so 10,450. Cash 4,500. So this is debit, this is credit. And then discount allowed, okay, 150. Then this one, reversal, isn't it? 7,006. So done. Any question?
Is the trade receivable control account is part of the ledger?
Oh, yes. Yes. Because trade receivable control account is in the general ledger. Remember, general ledger is the main ledger. When we prepare trial balance, when we prepare financial statement, we always refer from the main ledger, not from the subsidiary ledger, not from sales ledger, not from purchases ledger. So trade receivable control account and trade payable control account is part of the main ledger.
Oh, okay.
Did I answer your question well?
Yeah.
Okay. Farah, are you home now? Or are you still outside?
I'm still outside, sir.
Oh, raining, huh? Okay. So, any question, Farah?
So far, no question.
You can follow, is it?
Yeah. I can still follow.
Okay, good. Kelvin?
Still a bit confused, I think.
Confused.
Yeah.
You try and clarify what you're confused and jot down. If you know how to describe what you confuse in words, let me know. You write down, huh? You write down so that you don't forget. So the next class you must ask.
Oh,
Okay, review back. So, but don't hesitate to ask. Make sure don't even think that there is an existence of stupid question. There's no stupid question. That is the way how we learn. Okay. So you just jot down what you don't understand and ask. Okay, just three of us. I mean, this all are guys, and then we have nothing to shy with. Okay. So that's all for today. So I want you to go back and then review back what we have